I'm Ivan Rodrigues, your host for the day. On behalf of the Export Credit Guarantee Corporation of India Limited, ECGC, and Dun & Bradstreet, it gives me immense pleasure to welcome you to the inaugural event titled ECGC DNB Export Risk Management Conclave 2013-14. This conclave is designed to cover various areas of the export value chain with a view to highlighting the associated risks and strategies to mitigate them. Well, ladies and gentlemen, please welcome Mr. Kaushal Sampath.
On behalf of ECGC and Dun & Bradstreet, it is my privilege to welcome you to the inaugural edition of the ECGC DNB Export Risk Management Conclave. The objective of this conclave, ladies and gentlemen, is very simple. We wish to reach out to all of you, to exporters across the country, and discuss the risks that you face and how these can be mitigated. Equally importantly, we want to discuss how exporters can leverage the opportunities ahead in terms of new markets, new products, services, new financing avenues, supply chains, etc. For this, we are very fortunate to have with us a very illustrious panel of speakers with us through today. I thank all our distinguished speakers and all of you exporters for making the time to attend today's conclave, and I look forward to the deliberations today. Thank you and welcome again.
I now have the pleasure of introducing Shri N. Shankar.
It's my privilege to extend a hearty welcome to all of you at the first ECGC DNB Export Risk Management Conclave 2013-14. With a way to increase awareness among exporters about export credit insurance and other related issues, such as prudential financial management, ECGC has tied up with Dun & Bradstreet for conducting the Export Risk Management Conclave, which will be a series of events focused on small and medium exporters, where various sub-themes and issues relating to credit risk insurance, forex risk management, working capital management, country risk management, etc. will be covered. Eminent speakers in various fields have kindly consented to address the conclaves proposed in Tier 1 and Tier 2 cities. On this occasion, ECGC and its staff rededicate themselves to increase the risk awareness of the Indian exporters so that the overall competitiveness of Indian exports is enhanced. Thank you very much for your patience.
I now have the pleasure of introducing our next speaker, Shri Ranjan Dhawan.
Ladies and gentlemen, I will address 3 or 4 concerns which are vital to exporters and whom we talk about every day. Please hedge your exposures. As a bank, we have seen so many clients who don't hedge their exposure, and we have a huge list of clients who have unhedged exposures, who have huge mark-to-market losses. So this is, the burden of my first point. The second is, as borrowers of banks, all of you are interested in what is the interest rate? Where will the interest rate go? I think going forward, if the inflation demon is controlled, then probably we would see a moderation in the interest rate environment. That was my point number 2. My third point is, again, very simple. Please keep a check on your buyer all the time. Let me conclude by a word of Bank of Baroda. Bank of Baroda is present in 24 countries. It has 100 branches abroad. Business is done with people. It is not done in figures. So our staff on the ground can help you understand the country with which you want to do business. And we really provide a window to the Indian exporter abroad in at least 24 countries. And we are present in each country. In many countries, we are present in multiple geographic locations. Thank you very much.
I now have the pleasure of introducing our chief guest for the day, Additional Secretary and Financial Advisor, Department of Commerce and Ministry of Textiles, Government of India, Srimati Anita Agnihotri, IAS.
The way this conclave, risk management conclave of DNB and ECGC has been planned, it is a very welcome news in the present volatile times, I see how professional it has been planned, and I hope we implement it that way. It has been planned in a way that not only DNB and ECGC, but they have their multiple partners, they come together, they address a whole range of issues which exporters need to be equipped to deal with. They will be going over and above the Tier 1 cities to the Tier 2 cities, and I think looking at the list of the Tier 2 cities, Mr. Shankar and Mr. Sampath, you may have to add to the list of the Tier 2 cities, because most of them will be very eagerly waiting to meet you. Because this way of systematically addressing the exporters, not only from the point of view of the services that you are going to offer, but also from the point of view of looking at risk as a strategy, risk management as a strategy in the present difficult times. Thank you very much.
With that, we come to the conclusion of the introductory session, and may I now request Srimati Geeta Muralidhar, Executive Director, ECGC of India Limited, to propose a vote of thanks.
Mrs. Anita Agnihotri. She was so eager to know about this whole event. The interest that she showed towards this whole event moved me, and she almost ended up doing a lot of research or preparatory, data assimilation. Ma'am, we really appreciate the trouble you took and immediate response to us to join us for this inaugural session. Thank you for that.
Moving on now to the second part of today's conclave, where our distinguished experts will provide insights on various topics linked to export risk management. So the first topic to be covered is Forex risk management, and we are privileged to have with us the colorful Sri Jamal Meklai, Chief Executive Officer, Meklai Financial Services Limited, to share his perspective on this topic.
Basically, I spend my life trying to help companies manage foreign exchange risk. So ideally, what foreign exchange risk management means is to find a way to eliminate the market from your life. Now, the most difficult part of that is the market is very sexy. So everybody has a view on the market, Now, I'm saying the most difficult part of my job is to tell people, stop thinking about the market. I'm saying, in principle, when you take a foreign currency loan, you should hedge it. And your exports, if the rupee goes up or down, whatever you get, you will make your margin because that's how you price your goods. What I'm saying is, to properly manage risk, A, you need minimum 3 nodal points. B, you need to have a very strong set of processes. And when I say strong set of processes, you can learn those processes anyway. But what is really critical is you have to have discipline. Right? And that is where I would say 99% of companies fail. It's very, very, very hard to have the discipline, which is why I say, in general, you should carry as little risk as possible. So it is a difficult situation, to be in a market. You are compelled to be in the market to, A, learn, as I said, most important, how to not be terrorized by the market, how to not think about the market, and how to create a set of processes. Now, here, let me give you 4 or 5 very key steps that are needed in the process, right? The first thing you need to think about is, how long are you going to look at risk? So, what I'm saying is, to really get it right, you've got to go deep into your business. As I said, you have to have the right tenor of risk identification. The second thing, which is absolutely critical in risk management, is you need to have a benchmark. If you're trying to achieve something, you need to know what you're trying to achieve. I'll tell you one other thing that a lot of companies used to get caught in, and many of them still do, but a fewer number, which is, do you manage your cash or do you manage your accounts? A lot of people are frightened of this FX gain loss. So I'm saying that is another gap that you need to just forget about the FX gain loss. It is not important. It is just an accounting entry. You have to keep a focus on what money are you making. So broadly, there's several of the pitfalls I see, but I think I've covered most of them. Key one being discipline, staying away from the market, managing cash and not the accounts, setting a benchmark, and identifying risk to the right tenor. So I'll stop at that.
The next session is on financial management, titled Banker as a Partner in Facilitating Export Business, by Shri N. Bhalerao, General Manager, Bank of Baroda.
From the perspective of the bank, there are certain precautions that we would like our exporter customers to take. Mr. Dhawan has spoken at length on this and actually has preempted me from saying a lot of things. First is to obtain the report from the overseas buyer from the correspondent banks, ECGC approved agents or approved agents like Dun & Bradstreet. Even our own branches abroad can be used extensively for obtaining the credit reports because we have a vast database available at our overseas branches also. We have observed in many cases that in their anxiety, exporters are taking orders without going into the background of the buyers, and ultimately they have landed themselves with trouble. Second is to insist on letter of credit from a prime bank from the buyer's country, confirmed order signed by the overseas buyer. Why I mention prime bank is that we have received several cases in our bank where an LC is received but from an unknown bank, and later on it transpires that the bank is either not available or the LC itself is doubtful. A lot of customers have suffered huge losses in these transactions. Then, as I mentioned, we implore upon all buyers to take buyer-wise policy from ECGC, which gives them added cover, apart from the cover that we take through the whole turnover packing credit policies. Goods to be exported should not form part of the restricted list of DGFT, which you are all aware. Then there should be a check on the special approval list of ECGC, restricted list of DGFT, defaulter list of RBI. On receipt of confirmed order, take suitable action to hedge the transaction. Avoid dealing with buyers from the US sanctioned countries, the OFAC list. There is an OFAC list which includes 17, 18 countries. So if you bill anything in US dollars on those countries, the money is there's a likelihood of the money getting blocked somewhere in the US. Then for obtaining incentives from exporters, should be registered with the Export Promotion Council, Federation of Indian Export Organization and tax authorities. Another recent development is that from 8th of November, RBI has allowed exporters to receive payments from third parties subject to certain conditions. This was a long-standing demand from the exporters, which now RBI has put in place. I think I will stop here. Let Mr. Venkateshwarlu from our SME department will make a small presentation.
In Bank of Baroda, we have a unique system of processing. We have established for SME loan factories. We are the pioneers in this loan factory concept. This is a unique business model adopted by bank for SME segment for establishing separate hub for centralized processing of SME proposals. We have about 52 SME loan factories spread across all over the country, and it is the main aim of this is to reduce the turnaround time or processing time so that we can extend our lending helping hand to the SMEs in a better way and in a timely fashion. As a bank, we provide the finance for the capital expenditure by way of a term finance and by way of a working capital for their day-to-day routine operations. And we also provide, with an international presence, we also provide the foreign currency finance by way of a PCFC for the exporters, by way of a ECB loans, etc. from our overseas territories. We have the product offerings, we have a conventional products, and again new products also is introduced by the bank from time to time to take care of the requirements of the customers. And in the Bombay, we are having 3 SME loan factories stationed at Bhandap and Jogeshwari and Bagadupur with to take care of the various requirements in nearby areas. And thank you very much.
The next session is on credit risk insurance, and we have with us Srimati Padmavati Rajasekaran, General Manager, ECGC of India Limited.
Broadly, we have two sets of products. One we call the policy for the exporters. The other set is the export credit insurance for banks, which GM of Bank of Baroda presented and mentioned that their entire export credit portfolio, comprising of packing credit and post-shipment funding, is covered by ECGC. So that is the other product which we offer to the banks. And this is the major business for the corporation, where almost 2/3 of our income flows from the ECIB business. Policy is what we give to the exporters. Now here again, we have two broad categories. One is a set of products for the short-term exporters. By short-term, we mean where consumer durables are exported and the credit period does not exceed 180 days. Now when you look at the short-term side, there are four broad categories of products. We call it declaration-based policies, exposure-based policies, specific shipment policy, and consignment policies. The products are specific to the transactions. It is not a whole turnover cover which we give, whereas under short term, we provide a whole turnover cover to cover all the transactions of a shipments of an exporter. So based on the needs of the exporters, we have evolved several schemes to address the individual needs. So all that I'm trying to tell you is we have several products to suit the needs of every individual exporter. I would just like to conclude by saying, or rather drawing your attention to our tagline, which says, "You focus on exports, we cover the risks." Thank you.
Well, the next session is on supply chain risk management, and we are very lucky to have today two eminent experts who will speak on this topic, one after the other. Let me first introduce the first speaker, Shri Deepal Shah, Chief Executive Officer, Hindustan Cargo Limited.
It is very important that the SCM is treated as more of a knowledge-based business rather than just an action-based business or a department. With the fast changes that we are looking at, we need agile. We need agile SCM departments or partners, because the pace of change is so fast that unless you are glued on and you are very clear about what's happening, you will not be able to keep pace and you will lose out somewhere your competitive advantage. Innovative global supply chain and building competitive advantages through that. Innovative global supply chain is something that we need to understand. A lot of companies, I can name lots of them, have built strong competitive advantages by actually looking at innovative ways of managing their supply chain. The second one is buyers consolidation. A lot of American giants who are large retail outlets have used buyers consolidation, a very unique and innovative way of actually reducing their inventory cost and reducing their logistics costs. Specialized value-added services. You know, a lot of logistics suppliers also provide basic assembly, knitting, packing services, which help you actually outsource some of this and look at your core businesses. Yeah, today the competition actually is so much in the core business that it's more important for you to outsource things which you're not good at and have a specialist look at it. Another thing which has happened post the 9/11 is that the lot of governments have started to look at players and companies who are registered and who are clean. So they have come up with a authorized economic operator kind of a certification. Governments across the world offer this AEO certification. For your organization, it's a good thing to have. If you have an AEO certification, it helps you move your goods faster, have your customs clearance faster across the world. What we have noticed is in the Incoterms, most of the people look at costs only. So when you are looking at your contract on Incoterms, most of the people look at your cost. Okay? And what we are actually ignoring, or cost and documents, Incoterms actually govern 4 things. They cover documentation, they cover costs, they cover risk and responsibility. The third and the fourth element is very important for you to understand. Lastly, about the global supply chain, and now about the local issues that we've been having, which I think most of you all know. We have several strikes. We have port congestions and strikes at the port. These are some of the issues and the risks that we have to deal with. So the idea of reflecting the local issues is that you have to be well prepared, because most of these are known and these surface anytime. So all these things you have to keep in mind in terms of time and deliverables. Thank you so much.
Second speaker in this session on supply chain risk management is Mr. Sanjeev Singh, Chief Manager, Country Head, Marine Cargo Department, New India Assurance Company Limited.
I'm aware of the problems of exporters also. And people just told about the Incoterms. Incoterms are one of the big issues. And I would just add that as an insurance man, I step in where the supply chain gets broken due to any casualty, accident or misfortune. So while ECGC takes care of your credit and financial risk, even political risk, we take care of the physical loss or damage to your cargo. Marine insurance can play an important role in supply chain risk management by promptly settling claims. I agree, it's not always done, but promptly settling the claim on account of loss or damage, including cost of re-forwarding goods to destination. This will be the role of marine insurance. It cannot substitute any other line. It cannot substitute the functions of your logistics. So we can always take care of the preventive losses, and that can be done by good logistics management. And for rest of the things, the insurance company, the ECGC, New India, they are there to take care of you. Thank you very much.
I'd now like to invite on stage Mr. Rohit Pandya, GM ECGC of India, to propose a vote of thanks.
First of all, I must thank the sponsors, the exclusive bank sponsor, Bank of Baroda, co-partner, SBI General Insurance, media partner, ET Now, investment partner, SMC, logistics partner, Hindustan Cargo Limited. We had eminent speakers during these sessions, and we thank all the distinguished speakers for sparing their time and keeping us awake and interested in the entire day. Thank you very much.